Ladies and gentlemen, welcome to this special interview. Today we have a returning guest to the show, John Rubino of Dollar Collapse, located at dollarcollapse.com. And I got to tell you, if it seems like everything is spinning out of control right now, well, that's because it kind of is. We've got rolling lockdowns and rolling shutdowns that are making it difficult for friends and family to get together this Christmas. We've got a nation that's even more divided than it was last month. And we've got sheer insanity in the financial markets while mainstream's clinging on for dear life. So we need someone to help us sort this all out. And I can't think of a better person than John Rubino to help us do that today. That's exactly what we're going to do. John, I'd like to thank you for joining us again on Silver Doctors.
Hey, Paul, good to talk to you again.
Now, John, this election thing is just driving me crazy because, I'm not either a part of the left or the right. I'm not any political affiliation. I guess you could say I lean libertarian, but it's just blowing my mind because, one half of the country thinks the election is over. The other half of the country thinks that the election is still on, and both sides think they're right, but one side is going to be wrong. Now, one of my concerns about this, John, is that if Trump is ultimately declared the winner through the courts or whatever, then the cities are instantly going to go ablaze like they were, and the riots are going to be way worse than they were over the summer and over the fall. But I'm not quite sure what happens if it's Biden that's in. So I want to start off this interview today with getting your read on the election uncertainty and what you think it means for Main Street, John.
Well, this was always the scary scenario for this election because we were trying to do it during a pandemic where some places are locked down and other places aren't, and some states are doing mail-in ballots that they're not used to doing, and other states are doing other things. So it was always unlikely that we were going to get it just right, and it turned out we didn't even come close to getting it just right. A lot of places just flat out via incompetence didn't do a good job of running their elections, and some other places it looks like there was cheating, so as you said, whoever ends up winning, the other side is going to feel like they were cheated. Right now it's looking like Biden is the next president, even though Trump and his lawyers are uncovering some potentially very serious cheating on the part of Democrats. But it's not clear that they can turn that into an election victory, even at the Supreme Court right now. But again, who knows? This is so crazy that there's no way to know exactly how this turns out. So I think you're right that if Trump goes to the Supreme Court and they make him president, that the people who lost out, in other words, the Democrats and everybody to the left of the mainstream Democrats, will take to the streets, and we'll have, civil unrest that dwarfs what we just had. If Biden wins, I think the Republicans are not probably going to not take to the streets, but 48% of the population is going to feel like they were cheated out of this election. And we've got midterms coming up already. In the US, we always have another election coming up, and normally the president's party loses seats in the House and the Senate in midterm elections. So we will have a highly motivated Republican base 2 years from now. That is that's angry and very likely, or at least completely capable, of taking back the House. So then you'll have a really weak Democrat president and an enraged Republican-controlled House and Senate, and we're basically gridlocked at that point. Which, you can make the case that that's the best way for our government to be, because they can do way less damage when they're gridlocked than if they actually are able to accomplish anything. So at the same time, it's going to be harder to get stimulus programs through. And that's really the key to everything here right now, because we were already so over leveraged that there was going to come a time when the governments of the world, and especially in the US, we're going to have to bail out everybody in sight with insane amounts of new currency and unprecedented amounts of asset buying by the Fed and deficits by the federal government. And what the pandemic lockdown did was it brought that eventuality into the present. 2021 is going to be the year when this has to happen. In other words, we have a choice to make. Are we going to bail out the hotel industry and the restaurants and the cruise lines and the airlines and Illinois and Chicago and about 20 other states and about 100 other cities that are bankrupt through their own mismanagement, but have had their functional bankruptcy laid bare by the effects of the lockdown? are we going to bail all those guys out with another, $20 trillion or whatever it takes? Or are we going to refrain from bailing them out and then drop into a 1930s style deflationary depression? So that's our choice next year. It doesn't even really matter who's in charge. If it's Trump, that's what's happening. If it's Biden, that's what's happening. So the decisions that we make in the coming year will determine which branch of the crossroads that we take. And I suspect we'll try for the inflationary branch, where we just create as much new currency as it takes to keep the airlines from going bust and from Illinois from having to default on its debt, et cetera, et cetera, et cetera. And then that shifts the pressure over to the currency. In other words, if we already created 22% more dollars in 2020 than existed in 2019. So we're going to have to do the same thing and more in 2021, which means we're just flooding the world with dollars. So basic economics 101 says that when the supply of something is going up at an accelerating rate, its value will tend to fall. And we're already seeing that with the dollar now, which is it's down about 10% versus even the other crappy currencies out there. And we're seeing industrial commodities, for instance, really start to spike. Iron ore and zinc and copper, they're way up. And lumber and house prices are up, and stocks and bonds are obviously way up. So we're seeing pockets of extreme inflation, which is to say extreme dollar depreciation already. And if we're going to repeat the currency creation of this year, next year, which we have to do if we're going to bail all these guys out, then that would, at least in theory and in common sense, put a lot more pressure on the dollar. And then that gives us a currency crisis, which is a whole different problem, which we haven't had to deal with since the 1970s. So, I think next year is going to be just fascinating from the standpoint of economic theory. If you do this, will this happen according to the rules of finance? And we'll find out. So and which will take us back to precious metals, because that's where you want to hide out in that kind of a situation.
Indeed. Now, you gave us a lot of valuable insight there, John. So let's pick that apart a little bit, bit by bit here. And let's start with the stimulus first. Let me give you just a couple of my thoughts, and then I want to get your thoughts on the stimulus, because it kind of seems like we're in gridlock now. You had mentioned the word gridlock, but, it's like they've been talking about this next round of stimulus since July. And it's like, 1 week it's on again, 1 week it's off again, 1 week they're close to a deal, the next year they just scrapping everything and they got to come up with a brand new deal. And when as far as that stimulus goes, my understanding is that you've kind of been noticing like a pattern where like once stock market starts falling, that knows you're close to the stimulus because that's kind of pushing them on a little bit. Or if I'm understanding that right, I don't want to put words in your mouth with that up there, but that's one point. And then the second point about the stimulus and about the stock market too, like if the stock market starts crashing, does that mean we're closer to the stimulus? Gold and silver have been correcting since early August here. And on August 7th was actually the day that silver topped out. And on that day, the Dow was 27,500, and we're sitting over 30,000 now. So even if the stock market does come down, I don't know if I'm so sure that the metals are going to crash like they did in March. They might dip a little bit, but I'm not sure it's going to be a hardcore crash again this time. And I probably just jumbled all of the things I just wanted to say in all of those points. So I don't know if any of that made any sense, but just what is your assessment of the stimulus, on again, off again? And then, well, if they do get one this year, we're going to need one again next year. And if we get one not until next year, well, we're going to need one right after that anyway, if I'm understanding that correctly. Or help me make some sense of the stimulus a little bit more there, John.
Well, we're going to need stimulus forever. I mean, there's never going to be a time, as long as this system remains as it is, that we don't have to be doing massive amounts of stimulus. Okay, so that question is over. And so the question that flows from that is, what's the timing of the pieces of stimulus going to be? And whenever, and this has been going on for quite a while, whenever the financial markets start to think that not enough new stimulus is coming soon enough, they tank. The stock market just falls apart. And then that panics the government, and they come in with their big stimulus that they were always going to do eventually, but the stock market forced their hand. And as for precious metals, what happened in 2008 and what happened in March of this year was that stocks tanked because they didn't think they were getting the kinds of stimulus that a credit addict really needs to stay stable. Um, and that pulled down pretty much everything, including gold and silver. For a little while, gold and silver just tanked, and the mining stocks collapsed by 60 or 70 or 80%. And then the government came in with stimulus, and everything went back to quote unquote normal, where stocks and gold and silver are all going up. So the fact that it happened twice in the last 12 years means that it could easily happen again. But as you said, it's not guaranteed. It could be that stocks do their temper tantrum, and gold and silver look ahead to the inevitable stimulus, and money starts flowing into precious metals, and they go up. That could happen. But the fact that it didn't happen the last two times around scares me a little bit when it comes to, for instance, my mining stocks, or the silver that I've got. You shouldn't be trading in and out of your physical silver and gold. So this is only an issue for people who have mining stocks that they might want to take some profits in if they think they're going down. And that's an easy thing to do. Technically, you just go in and sell some, but it's psychologically hard because these things are going to quintuple, a lot of these mining stocks, as this thing plays out. So the question is, do you want to, mess around with market timing, or do you just want to stop paying attention for a while, go to the golf course, go to the beach or whatever, and just ride this secular trend? And, as a compulsive trader, I don't really have that psychological option. I have to be in this trying to make it work in the moment. So I'm trying to figure out what to do. But saner people don't have to do that. If you can disconnect for 6 months, then you really don't care about this conversation. Your gold and silver will go up over time as this system implodes financially, and the mining stocks will rise by some multiple of what gold and silver rise, and you're going to be okay, more than okay. But next year could be a very tumultuous year for all kinds of assets, just because, like I said, we've got this big choice. And we might have to try to confront this choice in an environment of divided government, which means it won't happen smoothly. Like if the Democrats win the two special elections that are coming up for the Senate, and they end up controlling the Senate, then they've got the whole government for 2 years. And then don't worry about it. The stimulus is going to just flow like water, and everybody in the world is going to get bailed out. And then we worry about a currency crisis. So the scenario is very clear at that point. But if it's divided government, it's not nearly as clear, because a Republican Senate doesn't want to bail out all these badly run Democrat controlled states and cities. That they don't want to let those guys off the hook for their just horrendous mismanagement. So they're not going to finance the wholesale bailout of Chicago and Illinois and on and on and on. And that's where it's going to hang up. So we'll see. It depends on this next election, and then it depends on what the stock market does after that.
And it's very interesting. You're bringing up some very interesting points. And now, me personally, yes, I would definitely just kind of detune it and tune it out, because I haven't placed a trade in a couple of years. I blew up trading account about 4, 5, 6 years ago now, but I haven't placed a trade in a couple of years. But yes, definitely, I like to watch the tick by tick just because I'm a nerdy guy like that. But that brings me to the point where, for someone who is trading it, yes, because, as we're seeing, one sector can just get hot like that. And, if you're out for too long, you're going to miss that sector getting really hot. Speaking of which, it wants to kind of lead me into a discussion about inflation, which you had touched on a little bit here, John, because, when I'm thinking about inflation, I'm still seeing signs of supply chain disruptions everywhere. And I'm also thinking that I'm seeing the initial signs of the crack up boom. And these are just a couple examples that I want to tell you. One is my son was wanting a new graphics card for the computer, and you just can't even get these new graphics cards at all. So that led me to wonder about this brand new Xbox and PlayStation that came out, and they're selling for 2 times the retail price on eBay all day long. You just can't get them unless you want to pay twice as much for it. Then I saw this morning a headline saying that the electric Hummer sold out all of its 2021 production in 10 minutes. 10 minutes of its offering. So, I'm kind of seeing signs of the crack up boom at the same time, and signs of inflation and signs of supply chain disruptions. So just following a little bit more on this inflation, Could you explain a little bit more of the signs that you're seeing with inflation and where you think it might be leading us, John?
Well, the way prices work is that if the government creates a large amount of new currency, all that money doesn't just flow across the board equally into everything, so that bread and milk and cars and houses and everything else go up by the same 15 or 20%. That extra money flows into the hottest sectors. And so you get inflation in places, which is to say the dollar falls versus certain asset classes. And in the last decade, it's been houses and stocks and bonds. In other words, financial assets have been going up dramatically. So you've had raging inflation in those sectors and nothing much in a lot of other sectors. But now that's starting to spread out where, like you said, graphics cards are all of a sudden hard to get and therefore very expensive, and game consoles. Hey, here's another one. Wayne Gretzky, the hockey player, there's one of his old player cards, like a baseball card, but for hockey, is going on auction now, and it's expected to sell for $1 million. See, that's a sign that there's more money than good sense out there, right? And that's what happens when you create too much currency. You get people who have a lot of it sitting around and think, well, hell, why don't I just buy this for whatever it costs? And that manifests as what we think of as inflation. But the actual inflation is the increase in the amount of currency in the market. The money supply goes up. And then that inflation manifests in different ways. But what we're seeing now is a broadening of price movements to the upside. Like I mentioned before with industrial commodities, all of a sudden, stuff. Why in the tail end of a recession, a fairly deep recession, should copper be soaring and iron ore be soaring? And that's a sign that the markets are expecting all this currency to flow into also infrastructure build-outs and things like that, which need a lot of industrial commodities. So they're being bid up. Well, when iron ore and copper go up, then the products that include a lot of iron ore and copper also eventually have to go up in price too, right? Because the components of something add up to the price of the final product. So yeah, we're seeing the early stage of the crack up boom / currency crisis that we've always expected and should have come a long time ago and may finally be coming. And so then the question becomes, how do you ride along with that as an investor? Do you buy industrial commodities? And yeah, maybe you do now. If you'd bought iron ore and copper and uranium and the stocks that mine those things, you would have made a lot of money just lately. And it's possible that that goes on from there. Maybe Bitcoin is one of the big winners in what's coming, because Bitcoin is seen as an alternative to fiat currencies that are being inflated away. And gold and silver are always on that list. From the past 3,000 years, every time a country has screwed up their currency by creating too much of it, a lot of that extra currency has flowed into gold and silver, and they have held their values from the days of the Roman Empire and before until the present day. So gold and silver are going to do fine. And I think silver is actually a special case right now, because not only is silver a monetary metal that tends to trade with a lag along with gold. In other words, if gold goes up, silver will go up even more, but not at the same time. It'll languish for a while and then go up even faster than gold. But silver is also an industrial commodity that is really big in alternative energy. And assuming that the Democrats have some say in federal budgets going forward, they're going to try to ramp up environmental spending, some of which will be subsidies for electric cars and solar panels. Silver is in those things. So that's going to lead to a big increase in demand industrially for silver. And if there's any silver left over, the investors are going to have to fight over it, which means the price of monetary silver, maple leaves or silver eagles or whatever, those things are going to go up dramatically going forward. And then the silver miners will exceed the increase in the price of silver as they normally do. So you got a big silver bull market out there at some point. And again, a lot of it depends on how the political thing shakes out. If the Democrats win these 2 Senate seats, and control the entire government for 2 years, then you want to jump on silver because that's going to be one of the big winners. And if it's a divided government and we don't know about the timing of stimulus and what the stock market's going to do, then it's a dicier 6 months that we're looking at, but still a great 5 to 10 years. So, this is one of those very uncertain times in the short run, but extremely certain times in the long run. I'm terrified of the social ramifications of what's probably coming, but excited by the investment thesis that flows from it. So it's one of those really good news, bad news kinds of situations that we're looking at.
Indeed. And there will be winners and there will be losers. And that all comes down to the information that people have access to and being able to act on that information. Speaking of which, let's stick with the dollar here for a second, John, because I have this feeling, speaking of information, that the Fed is going to come out next week when they have their meeting, and well, it's not my feeling. It's the feeling that a lot of people have, that they're going to come out and maybe announce yield curve control or a cap on interest rates or targeting interest rates or something like this. And my point there is, if that's what it's coming to, if they're going to say, okay, the 10-year is not going above 1% or 0.5% or wherever it is they're going to try and target, that comes to a cost of the dollar, doesn't it? Because basically they're letting the inflation run hot on the one hand, they're capping interest rates on the other hand. So that tells me that that's going to be even more bad news for the dollar going forward, which is kind of the opposite of silver rising. But did that make sense right there, John? And what is your outlook on the dollar? Because a lot of people were saying, yeah, but the dollar's fallen so much already this year that it's due to bounce and strengthen for a while. But if we do start capping interest rates formally as stated policy or something, I see that as very detrimental and that the plunge can continue. Thoughts on the dollar, John?
Well, what the Fed is going to do, and they have been doing for really decades now, is targeting the stock market. So they focus group their statements with the idea of making sure that they reassure the stock market. So they'll say stuff, but it'll just be made up policy initiatives and attitudes and expectations designed to make people buy stocks. They're definitely going to say soothing things for the financial markets. But the dollar is not their concern at the moment. They're concerned with the stock market. So if the Fed gets it right, but the thing is, they've got to go big to reassure the stock market. And they really don't want to come out with just some crazy new thing like negative interest rates or targeting the 10-year Treasury yield at 0.3% or something like that. That would be extreme. So what they'll try to do is just jawbone it. They'll just say soothing things and hope the stock market likes it. So the risk for dollar bears is that the stock market isn't buying it and it tanks, and that sends panicked safe haven capital into the dollar and pushes the dollar back up for a while. When the stock market tanks, the money that's flowing out of the stock market has to go somewhere, and a lot of it flows into dollar denominated assets, which pushes the dollar up. So we could see that, but then the government's response to that would be, oh, whoa, did you interpret what we said as not being incredibly easy forever going forward? Well, let me reassure you, we'll act so we're serious, and we'll cut interest rates to -1%, and we'll do all this other stuff, and then we go back to the stock market liking what they hear and the dollar being sold off. So you could have a spike in the dollar and a collapse in the stock market over the next few months, depending on what the government does, very easily. We could have a replay of March, in other words, very easily. And so that the question is, do you want to just forget about it, come back in 6 months, or do you want to try to trade it? And if you want to try to trade it, you've got a very challenging set of circumstances to work with.
Mm-hmm. Indeed, very interesting. Thank you for that insight. And then just a general assessment. We've been talking about the financial markets and silver and the dollar and interest rates and things like that. But shifting to Main Street, what is your assessment of Main Street right now, John? When you think about all these rolling lockdowns and all of these rolling shutdowns, and some states you can't do anything, some states you can do anything you want. Just what is your assessment of Main Street USA right now in the economy on a macro level, John?
I think it's brutal. Most of the restaurants in the country are going out of business. The airlines have got to be bleeding cash still. They were for a long time, but they've still got to be hemorrhaging. The hotel industry is a mess. New York City's hotel occupancy rate was something like 10% not long ago. I don't know what it is now, but it can't be much more than that. And that's bankruptcy level for any hotel. And it just goes on and on. There are a lot of industries that are basically functionally bankrupt right now if they're not bailed out. And big businesses are doing well while small businesses are being just blowtorched out there. They're just being crushed. So not only is Main Street in trouble, but economic inequality is soaring, and it was already at French Revolution levels before the pandemic hit. And now with these lockdowns, you're basically seeing the government policy throw all the small businesses out of work while enriching Amazon and Walmart. And I think that's a terrible political, it's morally reprehensible, but it's also terrible politically because it leads to instability in the political system. So I think that's what we're going to see going forward, unless the government comes out with, $5,000 stimulus checks for every individual, and they do away with the lockdowns and say, okay, everybody can go back to restaurants now, and try to resuscitate a lot of these small businesses, which they're not going to do. So we're going to have a brutal first 6 months of 2020 or 2021 in terms of small business bankruptcies, and I don't think there's any way to avoid that right now, and the ramifications of that are just well, I mean, they're hard to predict, but a lot of the possibilities include civil unrest with small business people out in the streets, and mass bankruptcies and banking crises and commercial real estate crises, all that kind of stuff. And I forgot to mention that huge numbers of renters now can't cover their rent, and they're going to either stop paying their rent or be thrown out of their apartments and rental houses, which means the landlords are going to go bankrupt. So yeah, it's going to be just brutal. And the government's going to have to deal with that some way, somehow.
So it sounds like the overall point right there is, my goodness, all that they've done during 2020 is buy time, and it's all coming to a head here in 2021, if that's what it sounds like, if I'm understanding that.
I mean, we've been kicking the can down the road forever, and 2020 was just another example of that, but on a much bigger scale. I think we're going to look back on this and conclude that we overreacted to this pandemic on a monumental scale. Because, it turns out, apparently, that if you just take a lot of vitamin C and vitamin D and zinc and melatonin, that you cut your death rate down to something that's barely noticeable in the scheme of things. It's more dangerous to drive to work during rush hour than it is to just live a normal life while you're taking those supplements during a coronavirus outbreak. So we didn't have to shut the economy down. We didn't have to bankrupt half of the small businesses in the country, and we panicked and we did that. Or we did it as part of a plan, which concludes with martial law and the Great Reset, and that's a scary thought, but it's more believable than that we were just stupid, that we just didn't know what we were doing, and we all panicked, and we chose these horrific policies that are ending up bankrupting half the country for something where the ultimate death rate is going to be not out of line with a lot of other risks that we live with every day and manage. So I don't know. I think historians are not going to be kind. Historians are going to be brutal to people running the big countries of the world all the way from 1971 to the present. So this is just going to be another chapter in these history books that are just a takedown of the fiat currency, fractional reserve banking world that we experimented with since 1971.
Very interesting insight. And I hope you're right there, because I like your optimism. My gut is telling me that people are inherently evil, so I wish I could share your optimism. John, we have spoken about a lot of stuff here today, and I just want to know, this year everybody's ready to say good riddance to it, but it's not over yet. So, just kind of all the things we've been talking about here today, just what's on your radar the most? Is it certainty with the election and just having it resolved, or is it, this vaccine rollout, or is it another stimulus, or what is the one thing that you're looking at as we finish out the year here, John?
Well, it's the complexity of all of this, Paul. You named three things, any one of which could be a monumental crisis by itself. And we've got them all happening at the same time. So it's like Jim Rickards says, the more complex a society becomes, the greater its propensity for a collapse. And we've created just this insanely complicated, complex system right now. So it's very easy to envision the things you just mentioned kind of creating this negative feedback loop where they feed off of one another and lead to some kind of just absolute chaos in the next few months. And I hope that's not true, but I think we've created the conditions where that's certainly possible, and where we really got to protect ourselves financially from this stuff, because a lot of people who really don't deserve to be bankrupted are just going to be wiped out by what's coming, and we don't want to be in that group if we can help it.
Indeed. And what do people get out of Dollarcollapse.com?
Well, Dollarcollapse.com is a blog/news aggregation site that covers all this stuff, continuously updated. I've got a join the email list tab there. You click on, put your email in there, and I'll just send you whatever I do for free. And, we don't sell the mailing list, and we don't let anybody else have access to your email. So what you get from us is all you will get as a result of joining the email list.
There you have it, folks. And John will have his finger on the complexity for us so we can catch up with him again in the beginning of the new year here. John, I'd like to thank you for joining us again on Silver Doctors.
Thanks, Paul. See ya.